Welcome back. As promised, let's get a corporate conversation going now. Nitin Spinners is on our radar today. The company reported its earnings earlier this month and posted revenue growth amid what was a challenging quarter for the textile maker. Margins too were steady on a sequential basis. Now, given the correction in cotton prices, the YOY numbers are not fair to compare them that way. The company's managing director, Dinesh Nolkha, is joining us now to discuss the earnings outlook and the business outlook as well. Mr. Nolkha, good afternoon. Thank you so much for joining us here on CNBC-TV18. Q3 was, of course, a challenging quarter in terms of how the raw material prices also panned out. Can you tell us what is Q4 looking like in terms of cotton prices and improvement in all the three segments as well? Because I see it from your numbers, knitted fabric continued to see a decline. What is the outlook going forward?
Good afternoon, Sonal. Thank you for having me on the show. So as far as cotton is concerned, we are seeing quite a stable cotton prices since last 2 months. The cotton has been stable around 62,000 rupees a candy, plus minus 2-3%, which is a welcome change since last year was a very volatile year where we saw plus minus 30% kind of changes. So that way cotton prices have stabilized, but still they are higher than the international market, relatively higher by about 10 to 12%. As far as our business segments are concerned, as Nitin Spinners is concerned, our operations for the spinning yarn is going now at full stream. We are running our full capacities. Also, our weaving and fabric processing also is running at full capacities. Knitting still is down, and we are seeing it is better than last quarter, but still we have to pick up to the normalized levels in that segment.
So how much better is knitted fabrics in Q4? How much better is it expected to be in Q4 versus Q3? And how much do you fall short compared to normalized levels? And what would the inventory that you are sitting on be for knitted fabrics?
Knitted fabrics we generally make off on the pre-sold basis only. So we are not having inventories as such for the knitted fabric. But knitted fabric normally operates at a capacity utilization of about 70%. And last quarter, we were running only at about 26-27%. Now we are reaching about 40% levels in that segment. But that is a very small segment if we compare it to the total revenue of our company. That is only about 6-7% of the total revenue of the company.
Yeah. Okay. So there is an improvement in knitted fabric. Of course, you say still subdued from the normalized levels. In that case, whatever you told us earlier, you were expecting a 4 to 5% growth in FY23. Now that we are almost done with Q4 as well, will you be able to hold on to that guidance, or you will fall short of that? Also, in terms of margins, 16 to 18% margin band is what you had told us earlier. What does this year and the next year also look like?
Yeah, first of all, on margin front, margin is like 16 to 18% was the normalized margin I have been always insisting on. So this year we had seen a lot of challenges on the side of the raw material side and also on the price volatility side. Plus the demand was also very 11% for this particular year. Now that is still running at those levels only. So definitely we will fall short of the margins. On the revenue side, we have seen a major deflation in the cotton prices and accordingly in the yarn prices as well. If you see from the average peak prices, the cotton has come down by about 35 to 40%. And accordingly, and also some production stoppages were there during this current year. So definitely will not be able to reach that 5% growth levels. In fact, we will be about 5 to 7% short of last year's top line.
You have plans to expand your capacity in the next 12 months. I think you're planning to expand your capacity across the various segments by 30 to 50% with an investment of 950 crore. Is that on track? And could you give us some more clarity on when it comes on stream exactly? How much does it boost your revenues and how you will be funding this capex? Any change in your plans?
There is no change in the plan. The expansion is going as per schedule. This expansion is already being funded by the internal accruals and the debt that has already been tied up completely. First, we have 3 phases of our project, wherein first phase of our value addition, that is woven fabrics plus knitted fabrics, is going to be on stream by end of this quarter or early maybe March or April. We will be able to commission that project. In the spinning side, we have 2 locations where the spinning is coming in. So part of it will be in the second quarter, June, July of the next coming year, and the rest will be by September, October. We are on track, and it is there is no changes on our expansion plans.
Okay, so no change in expansion plans. Last question before we let you go. We've been speaking to a lot of companies and they speak about this major decline in export demand. You also have a substantial chunk coming in from there. It was under pressure. Are you seeing any improvement and you expect this pressure to continue for coming quarters?
Normally, if you see our past reports, we have been exporting about 65% of our total revenue. In the last 6 months, it has fallen down to 50%. So definitely there was a lot of challenge on that side. But now again, we are seeing some improvements in the overall sentiments. Already when the prices were going down, a lot of the end users as well as the retail brands stopped their purchasing. And accordingly, that has affected the revenue basically on the export side. Now that is the inventories in most of the European brands as well as US brands is normalized, and they are back to the buying time. So I think this should, going forward in another 4 to 6 months time, we should see a normalized level of exports.
Dinesh, we'll leave it at that. Thank you very much for joining in. That's Nitin Spinners for you. Need to slip into a short break. We'll come back with more on individual stocks. We'll also get our mid-cap spotlight stock for you.